Well, folks, what do you know? Trump's starting to de-escalate and the stock market is exploding. We're up pretty much 3% or more. Actually, wait, the Nasdaq's up almost 4% on the day, but pretty much every index is up over 3%. So we have to break down what's going on with Trump, China, the tariffs, the trade war, and we'll break down the stock market charts, what I'm looking to do today. But first, guys, hit the like button. Do not forget to subscribe and join the free email stock newsletter, which is linked right down below. Get in there, guys. And with that being said, cheers. Let's dive into it. So like I said, the market is completely exploding right now. The S&P's up over 3%. QQQ is up almost 4%, guys, which is nuts. The Dow's up 2.5%, and we have the Russell up, let's see, about 3.5%. Yes, you heard that right. And that's after we got news yesterday. I'm pretty sure it was after the bell that Trump is starting to de-escalate, right? And saying that the tariffs will come down on China. They won't go down to zero, but they are going to come down. And that sent the stock market after the bell yesterday through the roof, and obviously that's carrying into today. So before we break down these charts, talk about what I'm looking to do, the whole 9 yards, let me go over these articles very quickly with you guys. Bear with me. I'll pop this one up here from CNBC. So it says, Treasury Secretary Scott Bessent said he expects de-escalation in U.S.-China tariff fight in the very near future, guys. Very near future. So he told investors in a closed-door meeting on Tuesday, which I guess now is broadcasted to everybody. So much for a closed-door meeting. But he said he expects there will be a de-escalation in President Donald Trump's trade war with China in the very near-term future, according to a person in the room, which, again, this was a closed-door meeting. I guess a person spilled the beans to CNBC. It looks like here, Bessent said no one thinks the current status quo is sustainable with tariffs at a very high rate. He said that in a private investor summit in D.C. hosted by J.P. Morgan Chase. And Bessent said he believes that the prospect of de-escalation between the economic superpowers should give the world, the markets, a sigh of relief, which essentially is what we're getting now, a massive sigh of relief rally. Let's come down here a little bit more. Bessent also insisted that despite the U.S. ratcheting up tariffs on Chinese imports to 145% and China retaliating with 125%, the goal of Trump's policy is not to decouple. The U.S. Cabinet Secretary noted that negotiating with China is likely to be a slog, quote unquote, but neither side thinks the status quo is sustainable, according to Bessent here, which I guess we could all agree on. I mean, nobody thinks 125% tariffs are sustainable for the long term. It's just not, right? It's not sustainable. And if we come over here, this is what Trump said himself. I'm pretty sure he had an interview after like 5 p.m. Eastern Standard Time yesterday. Looks like here it was at a White House news event. Let's see. He said 145% is very high, and it won't be that high, Trump said. He said it won't be anywhere near that high. It'll come down substantially, but it won't be zero. So in other words, guys, Trump is starting to de-escalate and really reveal kind of the plan here, right? Start this negotiation with China or go back and forth with raising the tariffs, ultimately to then slash the tariffs, not to zero, but let's say, for example, to 20%, and then keep them there. That was Trump's plan pretty much the whole time, right? Or one would argue that it might have been his plan the whole time, or maybe he's bending the knee to China, realizing he's not going to win the trade war. There's a lot of arguments on both sides here, but One would argue that he turned these tariffs up all the way to 150%, 245%, right? He put these tariffs super high so then they can come to a negotiation at a much lower rate, which essentially is what he's saying now. He said it won't be anywhere near that high. It'll come down substantially, but it won't be zero, obviously. I mean, if we got to zero tariffs after this whole debacle, that would be ridiculous. It's like why go through all this if tariffs are going to be zero? So they're not going to go to zero, but they're probably going to come down substantially, according to President Donald Trump. So this, in and of itself, is causing the market to go crazy because uncertainty is coming down, right? We're getting closer to a deal, and B, right? It's not seeming like it's escalating further. We might be at peak escalation, at least as of right now, and things are starting to cool off a bit. And that's why we're seeing the VIX back in the 20s, the mid-high 20s. It's down 9% on the day. Gold's down 3.5%. I mean, pay attention to these little things here, guys. Gold, which has been going crazy, right? Flight to safety asset. Oh my God, the dollar is collapsing. Oh my God, we're going to go to Armageddon, World War III. That's starting to come down. The VIX is starting to come down on this de-escalation news, and equities are just going ballistic. Do you guys remember this this wedge that we drew out in my video yesterday? One of my videos, at least. This is now completely playing out. We're breaking out of the wedge. We have a golden cross on this 30-minute on QQQ. Same thing on SPY. Let me show you guys this. You can see that. Boom. We have a golden cross breaking out of these moving averages and the wedge as well. Let me actually get some coffee to that, guys. Cheers. And by the way, hit the like button. Make sure to subscribe. Follow along for more content. So yeah, man, we're completely, not completely breaking out. I don't want to get too far ahead of myself here, but we're looking pretty good. Now we're actually getting close to the highs from 2 Wednesdays ago, where we got news that we're getting a 90-day pause on the tariffs, right? You guys remember that 2 Wednesdays ago? We saw a big move in the stock market. Now we're pretty much back to that level, the high from that Wednesday, which that's going to be critical. Yes, we're taking out the wedge. We're looking pretty, but we're not fully out of the woods yet until we start breaking at least 545, 550 on SPY, which is right by that high from 2 Wednesdays ago. And QQQ needs to start pushing out of, I would say, 465, 470 at least before we start getting more momentum. And that's kind of where we struggled a couple Wednesdays ago when we got that 90-day pause news. We got to about 467, 468 on QQQ, and then we got rejected there, kind of failed there a couple of times in the days after that. So we're going to need to break out of 467, guys, 470 on QQQ, and it looks like we're getting closer and closer. What a day, man. We are looking fantastic so far right now. And on the 4-hour chart, you guys are noticing now we're testing the 180 SMA on QQQ, which has been resistance for, a good 2 months now, and SPY is testing it as well. So this is the moment of truth for these indexes. And hey, if we just keep getting good news that we're getting closer and closer to a deal, don't be surprised if this rally is legit and it's got some legs to it. Do not be surprised. So yeah, what a day, man. Stocks are up across the board. Our portfolios, hopefully your portfolio's looking good. Mine today is looking fantastic. I mean, oh my gosh, it's up a ton, and I couldn't be happier about it. And this is why it's so important to just hold on to your stocks. You know what I mean? Don't panic sell. Don't go all cash and try and time the market, because you don't know what news we're going to get tomorrow. You don't know what headline we're going to get, positive or negative. In this case, positive. you don't know what's going to happen that's going to move your portfolio. And if you're out of stocks completely in cash, you're going to miss some big moves. You know what I mean? You're going to miss some big moves. And there's a book, I forget, there's a quote. It's like, if you miss the 10 to 15 best days in the stock market, let's say you were in cash trying to time it, and you miss these 10 to 15 best rebound days, your return is a lot lower than somebody that didn't miss those days, that was fully invested. You know what I mean? So keep that in mind. Keep that in mind. And I'm not saying for sure this is the bottom. We don't know, but let's just say we're heading in the right direction. So let me know your thoughts in the comments, guys. Hit the like button. Do not forget to subscribe. Follow along for more content and join the free email stock newsletter. I send out my top stocks weekly right to your email. That is linked down below. And with that being said, cheers. I'll catch you all in the next video.